Yeah, market has liked the result. And look, David, I think you also got to look at the chart on Bank of Queensland. It's not been particularly, it's been one-way traffic, hasn't it, for up until today, and that's down. And that's been the case for the last 2 or 3 months. So the stock is regaining some of that lost territory over the last couple of months. But, George Fraser's the CEO MD came out and he gave a pretty positive outlook statement, a performance update is what they called it. And some of the key points there was that financial year 22 guidance improvement in income and cost. Jaws was up around, or they're looking at 2% at this stage. There's been a strong application volumes increase in home lending and business, which is very good across the board. In fact, business banking grew by 200 million in the first quarter of 22. They did mention they had headwinds in net interest margins as well. No surprises there at all, because we've seen the four majors basically say the same thing. So there was never going to be a surprise with that one. But they're pretty positive. They're saying that even though despite price competition and obviously very low interest rates as we speak, expenses will be lower by around 1% in financial year 22 compared to 21. And the ME Bank integration, the acquisition they've made there, looks very positive. They expect to gain about 23 million in synergies. You're right, and the cost to income ratio did come down second half of financial year. So market actually really likes it, and the Bank of Queensland up 35 cents when I last looked. 4.5%, but I wouldn't be surprised if it's actually snuck a bit higher since then. So good result, and nice to see one of the banks actually go up once they've come to the market and given an update. We didn't see that the last couple of weeks when we had the other banks doing that, the majors. So this is a pretty good response. I take it positively for the sector.